all to BYOB Market Talks. Welcome, welcome, welcome. So as we are getting ready this evening, as we are going to dive here into the market, I just want to, as I stated, I just want to welcome. This is Tasha Dyer, the Trade Whisperer, creator of the BYOBCashout, and I love it. You guys had an awesome day today. Awesome, awesome, awesome. I love those 777s in the chat. Good evening, Baton Rouge. 777 in the chat. I am a master trader. I am the signal. All my trades end in profit, right? I am a master trader. I am the signal. All my trades end in profit. And so it's so awesome to be able to sit here with you guys and to be able to know that that's exactly where we are. So this is BYOB Market Talks. So I'm going to go ahead and share my screen with you guys now. But as I'm doing that, what I want to know is if you are new to BYOB Market Talks, if you are new with us this evening, let me get a 111 in the chat. Let me get a 111. Okay, let me get a 111. And if you are still learning how to cash out, let me get a 222. Well, welcome, 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 and welcome back. Welcome and welcome back. So welcome and welcome back. Okay, so, uh-oh, come on, don't lock up on me. All right, so where we were is, I'm going to, not what I'm trying to do. So what we're gonna do tonight and what we're gonna do is, I wanna make sure first and foremost, right? Yes, please add to those affirmations. New and still learning. So I've been getting a little feedback from you guys, okay? A little feedback. We're gonna talk about the strategy. We're definitely gonna talk about the BYOBCashout this evening and looking at the feedback collectively at where we're at. So we begin and we're adding different things to like how to utilize the tools. Let's take advantage of the tools. So one of the things that we've definitely done is been able to get in here in the harmonic scanner, the pivots, and those types of things. But we want to make sure that we build on that. We want to make sure that, you know, we definitely want to make sure that we're building on that. So what I want to be able to do with you guys is explain the strategy, BYOBCashout, help make sure we all understand the strategy, right? Definitely want to make sure that you understand how to cash out. Definitely want to understand that you do that. So you understand your 10 pips and cash out. Okay, you got that down pat. But then at the same time, what I want to do also is make sure that you understand your support and resistance lines. You are trying to set up the vibrato to make sure you, now this doesn't need any setup. I don't know if you mean like how I just logged on. The only thing I did, which you probably couldn't see my pop-up, was the only thing I did is I went down here to strategy and I clicked BYOBCashout. So the only thing you have to do is, now it just depends on what platform you're on. If you're on, right now I'm on IML Web Analyzer. So if you're on IML Web Analyzer, then it's down at the bottom. If you're logging in through im.center, then it's at the top. You know, im.center has the white background, this one has the black background. You don't have to make any changes. Everything is loaded in here. You don't have to make any changes. So no changes needed. Everything is ready to go for you. So you're welcome. So once you log in, you're in. So I want to talk to you about the strategy, okay? Want to talk to you about the BYOBCashout, and I want to make sure you understand your support and resistance lines. So I keep getting that question. I keep getting messages from you guys. There is a playlist with market structure, and it does have support and resistance lines, but because we're trying to advance and go to the next level of utilizing the tools, I am going to do you know, just a recap for you guys. So just to kind of make sure we understand that, because whether, you know, and just to kind of show you, I have them both pulled up here. You know, first and foremost, if I'm using the harmonic scanner, which we've been using. If I'm using that, then this is definitely support and resistance lines. Okay, guys, this is support and resistance lines. If I come in here and where we started touching on the pivots, okay, if I am using anything off of this chart, we did a training on pivots last Tuesday, and this is support and resistance lines. That is what this is, okay? These are support and resistance lines. That's what these are. If you notice, if I scan out, you know, or scan where you can see it, you know, even if I change this to a line chart for you guys, in which we use to do our support and resistance lines, you can see where they are sitting on support and resistance lines. So I just really want to highlight, but of course you're going to make those changes. So we're going to be using the tools and we're going to bring it back. Remember, pivots are an indicator. Okay, pivots are an indicator. We went through the training. The harmonic scanner are harmonic patterns. Yes, it's loaded on there. It's definitely loaded. And I'm going to create a playlist for that as well, because we're not done. So, but it's loaded and it was last Tuesday. So, but this is a harmonic pattern. So these just use different things. And then when we come back over here to the vibrato, this is a trading platform, okay? So, but yet they still give you entry triggers. So I definitely want you to understand the difference between the tools, but why we bring it back over here to the vibrato. Why do we bring it back over here? So just so you can kind of understand why we do what we do and how it's done and why it's done this way. So as we're expanding out and showing you the value behind the tools that we have, you know, because it's enroll, learn, profit, and you're going to learn how to utilize the tools. You're going to learn how to utilize the tools that's going to put you in a position of profit. And that's where we're sitting at. And as you learn how to use them. So and there's a playlist on the vibrato and the BYOB cash out as well to help you understand that these are entry triggers. So these are entry triggers. So let's talk about the BYOB cash out and help you identify, and why is it important? Why do you want to know your support and resistance lines? You know, why do I call them a lifeline? You know, why am I stressing that all the time, to where I really want you guys to understand why they're so important. So as we're looking right here, the BYOB cash out, it's made up of 3 indicators, okay? 3 indicators. So my first one is my stochastic, okay? My first one is my stochastic. My stochastic literally is momentum in the market, okay? This is momentum in the market. And with the momentum that I have in the market, okay, with this momentum that I really have in this market, I'm looking at the blue line cross over the red, blue line cross over the red. So just kind of think about, as something is moving, if it gets too high, it has to bounce and it pulls back down. If it gets too high, it has to bounce and it pulls back up, okay? So that's really the momentum that you're looking to have, okay? That's that momentum. So when you have that momentum that's down and up, you know, that's where this momentum is. So now notice we're on a 15-minute chart. This is where we begin you. It's not where you have to stay. It's where you begin, but it's not where you have to stay. But when we talked compounding last week, and we talked about, that was Thursday, and we talked about you compounding in your risk management and from a trading perspective and everything else. Now you understand why it was listed there, and now you understand why we want to use the start with the 15-minute chart, and why everybody doesn't start past 10 pips or what have you, because we want everybody to be able to get in and out of profit, everybody to be able to get into the market. You don't necessarily come in understanding support and resistance. You don't necessarily, you know, I don't know where your account balance is starting out. So you definitely want to make sure you can accommodate everyone, and that's why we start from this perspective, and then you build and expand from there. Plus, I don't even understand your personality. What is your trading personality? Some people are scalpers, and that's fine, right? Some people like long-term trades, and that's fine, you know, but we begin here, you learn it, and then you expand out to what fits your personality, and this is how you begin to accommodate everybody. So now, where are we at? So Stochastic, first thing, we got the momentum going, okay? We got momentum. So we're gonna look at 2 of them. Now, this is what I also want you to understand. So I got my candles, okay? I got my candles. These are traditional candles. These are my traditional Japanese candles, okay? These are what they look like. Now, when I switch back to my Hikinashi candles, this is what my Hikinashi candles look like. So what I'm doing is I'm looking at my stochastic first. This is a leading indicator. Now I come back up here and I'm looking at my Hikinashi candles. Why am I using the candles? These are indicators, so they're lagging, right? They're indicators. And my PSAR, you notice how I have a dot per candle, okay? I have a dot per candle. Now, this is a parabolic stop and reversal. It is a trailing stop loss. That is what this is. So the market reverses. You notice when it's on the top, the market's selling. When it's on the bottom, the market is buying, okay? So that's a reversal. So when we say PSAR flip, you understand that the PSAR has now flipped to the top. When I say PSAR flip, you understand the PSAR has now flipped to the top, or the PSAR has now flipped to the bottom. So because this is a trailing stop loss, right? You can also, you understand that this is, when I say trailing stop loss, you basically, it's like that moving support and resistance that kind of go with you. But we still want to understand the traditional support and resistance in there. I got all 3 areas of value that are covered with these indicators, but I still want to understand traditional support and resistance lines. Just like these are trend candles. You guys never really see me draw any trend lines, but if I understand, you know, if it'll help you, right, you can still draw that trend line. You can draw trend lines on here, okay? You literally can draw trend lines, okay? But because these are trend candles. So if you draw trend lines, you can still see where it breaks. It doesn't change anything. It smooths out price action. So draw your trend lines. You know, you don't see me draw them, and that doesn't mean you can't draw them. You just kind of see where, if I draw them, if I put them on the chart, right, when you're going through there, because I use trend candles, you know, I can see that, but you can see where you have those touches with the trend line, it breaks the trend line, the trend is changed. So that's just another tip or something that can actually help you as you went through the academy. But once again, that's just another area of value that you're looking at. And so these are trend candles. So hopefully that kind of clears it up. If I switch this back down, oh, wrong one. If I switch this back down to the Japanese candles, this is where you would have to have a trend line, right? And you can actually see the difference in there. So the pieces are better to follow than the trend. No, you need all of them. You're gonna need all of them, right? You're gonna need all of them. You can't, not just one, but you see that the PSAR does flip with it. So these are trend candles. These are, you're gonna need all 3 indicators. So you still want that PSAR to flip because that gives you that reversal. So if you think about it, you wouldn't have took this trade. You would not, I'm still gotta get to where I'm walking through the trade, but you wouldn't have took this trade till it broke the trend previously, right? That you wouldn't have took that. But notice that this will make sense, as I'm gonna leave this trend line here. I was about to delete this, but I'm gonna leave this here. So when did I actually get a flat top in a PSAR flip? When did I actually get that? I got it as it was breaking this trend line, right? You got a little pullback, it never came in, it never broke my, got a little pullback, it never broke, you know, it never would have hit my stop loss because my stop loss is above the PSAR, and it came up and it pulls back down, right? So it never, you know, so this is where you would have been looking for a break in the trend line, but utilizing the strategy, BYOB cash out, you see, when did this one actually take place? When the momentum broke, that it actually broke this trend line on this one. So that's why I said you can and you cannot, like, this really doesn't matter, because the trend candles help you identify the trend that's happening on this time frame. So it helps you identify your entry points and things like that. You notice when it actually lines up and when you're ready to enter that trade. So let's walk through it. I got my blue line cross over the red and a downward momentum. I got my blue line cross over the red and a downward momentum. I got a blue line cross over the red and the upward momentum. And hopefully with this on here, the things that you see when you're going through the academy, you know, it'll help you identify and see this trade clear that I'm walking you through. So I got my blue line, I cross over the red and the downward momentum. I'm gonna grab my arrows. So I got my blue line cross over the red and the downward momentum. So that's when that was ready. I got my blue line cross over the red and the upward momentum. Okay. Blue line cross over the red and the upward momentum right here. So that's two different trades. Okay. That's two different trades. Blue line cross over the red and the upward momentum, blue line cross over the red and the downward momentum right there. So I literally have both of them. So now, as I'm going through this, okay, now I'm looking for things that correlate with the buy. I'm looking for things that correlate with the sell. Remember, you don't see any of that. It literally will look like this over here to the side. So when you're looking at this, this is what you're looking at, right? When you're looking at this, this is what you're looking at. That's what you see. When you're looking at this, that's what you see right there, right? That's what you will see. So you don't even see any of that right now. So you don't see any of that. So this is what you see. So we know it carried on, but this is literally what you see right here. So I got my blue line cross over the red and the upward momentum. I got my green candle with a flat bottom, and I got my PSR that flipped to the bottom. So that's literally what I have right there. And the same thing, everything correlates with a sell over here. Yes, I have flat top candles over here, but I didn't have my PSR at the top. I didn't have a PSR flip, so I need it all. So I didn't get all of that until I got right here. And so this is fine, that momentum is fine. But you know, we got a little pullback, and this is where you guys start saying, oh my goodness, you know, is this trade still good? This is where you put your phone down and you say, you know what? I have to trust the process and I have to learn how to ride the wave. So as you advance from a 1-1-1 and you advance in your trading, you actually begin to see that as you start learning and understanding market structure, you actually begin to see how the trade is actually playing out. Now, okay, now this is where my time frame confluence comes in. I'm gonna pull this one up just a little bit. So this is where my time frame confluence comes in. I drop down to the 5-minute chart. Okay, I drop down to the 5-minute chart. When I drop down to the 5-minute chart, this needs to be selling. This needs to be selling. This one needs to be buying. Notice how it's selling and notice how it's buying, right? Because if it's not selling here and if it's not buying there, that means that something else is happening. We did time frame confluence on the 5 o'clock call. It was either 5 o'clock or one of the calls this morning. We did that time frame confluence, and when we did that time frame confluence and we dropped down to the 5-minute, it actually said do not enter a trade because the stochastic had already begun a curve, right? So you notice that, what does that tell me? It tells me that I either have a change in market direction, something else is going on, or it's just a slight correction at that moment. Change in trend, correction, but whatever it is, we don't want to enter in a pullback. Now, right here, we don't want to enter the market at that time. This one is buying, so everything is buying at that time. We hadn't got to all these curves over here yet. Everything is buying. I go up to the hour time frame. When I go up to the hour time frame, when I get up to the hour time frame, I'm looking for it to look like. Now at this point, it's not going to be cookie cutter like, you know, what the 5-minute is. This one actually has to look like something I put on a watch list. Okay. The hour is the swing of the market. The hour is the swing of the market. The hour is the swing of the market. It does not tell me the trend of the market yet. Okay. So if I'm looking at the other time frames, we're only looking to confirm the candles, right? You want it to look like it's something you put on a watch list. Like, for example, like if I'm looking like right here, if this stochastic was looking like this one down here pointing straight up, I mean, it's never going to be cookie cutter. It's not cookie cutter. You know, you got to look at it like a art. You know, it's not a science. It's really an art. So when you look at a trade, or we look at a trade and say, okay, put this on your watch list, or if you're trading, you say, okay, I want to watch this trade, then if your stochastic was down here pointed up, it looked like it just got started, is that one that you might want to put on your watch list? You might think, okay, well, that might just be a correction and it might continue with that buy. So that's little indicators that'll help you understand, right? So, but you're really looking for that candle. that candle, if it's a green candle, then I don't want it. I don't want a green candle at this point. I don't want a green candle at this point. For this one on a buy, I don't want a red candle. I want this one to be green. I want this one to be red, right? That's the swing of the market. But you notice like on this one, it's just better. The stochastic is actually at the top. On this one, the stochastic is at the bottom. You know, so this one actually lines up. So, you know, that's a good indication that you get more, or we might not be in a correction, or it's lining up for something more, because you might want to go back and watch that confluence training, because you can start seeing that things are lining up for more pips. I might be able to do more than my 10. So you want it to look like something you'll put on the watch list. So that's where that comes in. Okay, I got my, you know, here I have this looking like it's going into a sell. Here I have this one look like it's going into a buy, right? And you can still kind of see, look at that trend line. It's just nice and smooth. This is why, look, so now this helps you see that picture on the hour. Look at these trend candles. See how they trend candles? So you see the difference in the candles, right? So for you that are a 111 learning the strategy, 10 pips, cash out. Bam, you got your 10 pips and cash out. You market execution, modify, do you take profit? Now we analyze here, you enter on your phone. Do you take profit from where you entered the market, get your 10 pips, and you are good to go. That's where you do it. Now, for those of you all who are a 222, still learning, looking to do a little bit more, okay? I'm gonna go up to the 4 hour as well. You can kind of see where this actually kind of gives you like that trend of the market. You notice that this one was in that curve, this one was in that curve. So you would have had to wait just a little bit, but based on this hour, we could have traded to that next support and resistance line. To go further than that, we need to be with the trend of the market. When I say put it on a list, is that what you mean? No, when I say put it like a watch list, that means if I'm sitting down trading and I'm identifying trades that I'm looking at, if you are sitting down trading and you're identifying trades that you're looking at, or whomever, and you say, okay, this is a trade that I'm gonna watch, or this is or we're trading in the morning, and I'll say, hey, put this on your watch list, you know, that means that it looked like it's a trade that's setting up, whether it's waiting on a PSAR to flip, or you see the stochastic that's around the 20, and it looked like it's about like this one, right? Look how this stochastic is starting to get a curve, but it hasn't quite got there yet. That's something to watch. So when you start saying, hey, something to put on your watch list, that's what that means. It will not be cookie cutter. It will not be cookie cutter. And so that's where you just want to kind of play with the market. You want to get in the market. You want to start demoing, you know, if you want to get in it, you don't just want to sit back and look at it. The only way you're really going to know is when you get in the market. You get in the market in your demo account. You have to get in the market. You really have to get in there. So you got to do it. And that's the purpose of a demo account. But you got to get in there. So, and so that's what that means when you say put it on your watch list, like something you will come back and you're willing to take a look at. It's something that's it looks like it's going to set up. It's something that interests you. So because it's the 15 feeds the 30, that feeds the hour, right? That feeds the 4 hour. Because, you know, like the 1 minute feeds the 5, feed the 15, et cetera, et cetera, et cetera. So, all right, so here we have this. And you can kind of see where, you know, when this one actually switched over, went to more. But how do I know, right? How do I know where that's in my trade? Because the only one that you know is off this 15-minute chart. Off this 15-minute chart, I'm going to get 10 pips and cash out. That's it. Off the 5-minute chart, you're going to, you know, like that one flipped so fast, but you're not doing more than 5 pips. I'm not doing more than 5 pips. And it's all personal preference. You know, at that point, it's all personal preference. But my personal preference, I'm not looking for a 1 or 2 pip trade. Just like with the indices, I'm not looking for a 1 or 2 point indice trade. You know, I'm looking for a trade. So You know, that's just where I see it. So, but it's all personal preference. Some people will go trade an indice for 1 point and are happy with that. And some people will trade, you know, go on a 5 minute and get 5 pips and you're happy with that. But that's personal preference. Once again, everybody has a personal preference. So, so here we have this, okay? You know, and you're looking at this, and so now I want to understand my support and resistance lines. Change to the line chart, okay? Change to the line chart. These are the line chart is your closing prices, okay? Change to the line chart. This is your closing prices, okay? Now, this is what I want to show you. Like, you start looking at these touches. Look at these touches. So when you start seeing these touches, like you look, everyone is not gonna touch. Everyone is not gonna touch. But like, so this one touches, I got a touch here, I got a touch here, I got a touch here. You see how I start having touches that kind of go back? That's a support and resistance line. Okay, that's a support and resistance line. Look at that. Okay, so that's how you begin to identify your support and resistance line. Actually, let me go to the hour where I should be, because I draw mine on the hour. Why do I change to the line chart? Okay, I changed to the line chart. One, because it's easier to identify where those touches are. Because if I change back to my candles, Hikinashi candles, they're smoother, but everybody doesn't see where the touches are. Now you can see how clear that line is. Two, if I change to Japanese candles, look at all these different wicks. Now we're BYOB cash out, so you're gonna be using Hikinashi candles, but I wanna make the point to you why I began using line charts. Look at all of this. So if I know I can come here and I can drop this, right? You know, I can drop it up in here, but where is it? Look at how all this wicks around. So if you're trying to learn how to use support and resistance lines, and then so you want to be as accurate as possible with your take profit. So you see how this wick down at the bottom and this wick down at the bottom? Well, that you don't know where that happened in that trade. So if I go to the line chart is going to give me closing price. That's the closing price. So now look at the touch. That's the closing price. That's the closing price. These are closing prices. Now remember, it's still a zone, but for the most part, you see I'm right around those closing prices. And even if I came down here to this bottom one, okay, these are closing prices. So here I have my closing prices. I got my closing price. So if I change back to this, okay, I change back to my Hikinashi candles, even with my Hikinashi candles, you see where it's sitting at, right? It's kind of sitting up here on that zone. So you can kind of see where you might, you know, your take profit, you might have to move it up. You always want to kind of be in that zone, but using the closing price, you can still see where some of it wick down below it, but you don't want to support a resistance line, because sometimes it's more than this, and you don't want one down here. And then, you know, if I go down to the 15, you're gonna have more. When we drop down, look at how this is touching below. Look at how it's touching below. Look at how it's coming below. And then if I go to my traditional Japanese candles, it's gonna be worse. So look at look at how they're wicking down, or look at how these candles are protruding down. So you want that closing price, and that's gonna give you a more accurate take profit point. So look at these. Does that answer your question? So you want to have it on a line chart when you're doing those take profits. I mean, when you're doing those support and resistance lines. Now, once you get better at drawing support and resistance lines, once you begin identifying them and you start getting better at drawing them, you'll be able to just drop them on there, you know, as you're going through there, because your eyes you'll be able to kind of zone in on them and just see it. But right now, even if I look left, like I just dropped that one, but looking left, look at how it's still on those touches. So you can kind of see those. Okay, so I don't care I don't really care where you pull it from or, you know, where you're doing it. I want you all to draw your own support and resistance lines. You really, really, really want to get in the habit of drawing your own support and resistance lines. So if I change back to the Hikinashi candles, now look how nice and smooth it is on there. Even the ones we came up here and drew. Look at how nice and smooth it is on there, right? So any questions, comments on support and resistance lines? I just want to make sure you guys have that before, you know, see, and then you come here and you're like, okay, I know that's one, right? And if I switch it, look at how it's sitting on there. You can see, because then your eyes just kind of key in on it. On the hour, I recommend support and resistance on the hour. On the hour. And then you can drop down, when you drop down to the 15, now you can kind of see it. Now, of course, if I'm doing indices or something like that, then I drop down because of how it moves. So if I'm doing indices, for example, you know, like it's consolidated right now, but if I'm doing indices and if I'm on an hour doing it on indices, look at the difference. So of course you make the adjustments for what you're trading. So if I'm up here and I draw it, let me go to the line chart for you guys. So you can, you know, if I'm up here and you kind of come here and you make the OS something right here, I'm gonna leave it there. And you come down here. Remember, it's an art and it's not a science. And you come through here and you draw those lines, and I switch back. I'm not gonna go through the whole thing. I'm gonna just draw a few for you. And you can kind of see it, but then, right, that while that might only be a few pips on Forex, I come through here and that's, you know, 186 points. So that makes a big difference. So, because these are points. So that makes a big difference. So I'm not gonna try to go, do I draw them at every level? That's why we go to the hour, because you will have too many if you go to the 15-minute and try to draw. But on indices, I want those dramatic ones, because you know, you want 15 to 20 at a time, or 50 based on how you're trying to trade. Okay, you want that. So it just all depends on how you're trying to trade. So now you can see those other levels, like you see one here that wasn't on the hour. So you see one that's here. So for indices, I want that gap right there. I want a gap that's in here. I want a gap so I can break that up. So now, right, I want that gap. So now it's 90 instead of 180 something. So, and then of course I drop down even further because it's an indice once again. So you notice that, you know, you're gonna get, even if you're scalping this, now if I'm scalping this, of course I'm on a 5-minute chart, but even if, and the rules are the same, blue line cross over the red and downward momentum, right? Blue line cross over the red and downward momentum. I got my red candle with a flat top, PSR flip to the top, okay? Got it right there, see? Exactly, 15. So come here. Do my time frame confluence, flip down to the, go down to the 1 minute, come back up to the 30. I got my time frame confluence on this one. I don't have confluence on that one. I'm waiting. So I'm waiting. You wait, you just wait. You just wait. Don't have confluence. So guess what? Because if 30 minutes is where my confluence is. So if you just wait it, when I come back up and I check it, then guess what? Now I trade to my support and resistance line. When you trade to your support and resistance line, you know, where's my support and resistance line? Exactly where we are right now. So when you trade to your support and resistance lines, because that's where indices goes, right? And that's how you can at least, when that flips, right? When that flips, you can at least get 10 points. You know, you're going to get a 10-point minimum on indices. You're going to get a 10-point minimum. You can at least get 10. And as you start getting a feel for it, you'll get 20 to 30 points on there. you know, as you start getting 20, you start going from about 10, 20, you'll start getting a good feel for it as they flip as you're scalping that. Uh-oh, what just happened? Go back. So, but that was it, and it's gone. So I just kind of wanted to help you understand support and resistance line. So that one's gone. My markup's gone. So yeah, I don't know how that flipped, but yeah. Questions, comments? Questions, comments, testimonies? Oh, you're welcome. So, but yeah, these are your lifelines, because now you can understand that as you have the confluence and as you have that with this, then, I mean, literally, look at how this ran up. That was 186 pips right there, 186. Yes, indices do move. Yes, they do. So that's why you want to make sure you're confluent with it while you do it. And then, I mean, I don't want to mess this markup up, but use it. It's here. Like, use this. It's here. We went over this on the training, but use this. It kind of helps. You know, these are not signals. They're not signals. They're not signals. They're not signals, but they're trade ideas, because they're hitting on those entry triggers. So if I do my confluence, you can kind of see where it's not confluent yet. So you see it's setting up. It's a setup. So you can see where I got my blue line cross over the red and downward momentum. I got my red candle with a flat top, and I just don't have my PSAR on the top just yet. So you can kind of see where this pulled it on the 5 minute. So I don't have my PSAR. So at least, so hey, we're on one of the tools. So, you know, it doesn't, so I got my PSAR. So by the time that gets there, we'll pretty much probably have some confluence there. You definitely want that 1 minute, because that 1 minute a move before that one. So, but this, I mean, I just literally pulled this off of the vibrato. It gave me an entry trigger. It gave me an entry trigger, not a signal. It's a big difference, because I see the comments and a lot of you guys are like, well, I looked at it and it was wrong. Well, it's not wrong. I mean, this was an hour and 15 minutes ago. I'm on a 5 minute chart, so you can kind of see where that setup was happening. It gives you time to analyze this. So you literally, if this was right, I mean, it's supposed to be on here. If my swing of the market an hour ago was in a buy, so you can actually, if you wanted to counter trend trade, I got the blue line crossed over the red in the upward momentum. I have a green candle with a flat bottom, and I got a PSAR flip. So this is telling you that the entry trigger was for the sale, but I'm looking at this for a buy. Is it geared up for my sale? So you have to analyze this and say, you know what, do I want to take this? You know, this is where your demo, your experience, your feel of the market. Don't just jump in there and take the trade. Please don't. Please go demo it and help get a feel for it and understand what's going on. And it moved up, and voila. But look what happened. Where did it go to? Let's change back to our line chart. If I change back to my line chart, oil selling, oil's down. This is where you pose. So, and this, so you look at this, and where you have your, see where my touches are, right? Where my touches, 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 okay? Where my touches. So where my touches, you want to understand where they are. And when I switch back to my Hikinashi candles, where did it buy up to? You see even how it wicks out and it always tests those lines? So even if the blue line cross over the red and the upward momentum, I got a green candle with a flat bottom, I got a PSAR at the bottom. Where did it go up to? Because I had confluence. I had confluence on that. I had confluence on that. So where did it go up to? So this identified it. So as it was getting ready for that, now it's coming around and it's getting ready for this. And where's my next line? It's down here. So where is it getting ready? And then you have one down here. So where is it getting ready? support and resistance lines, and that's pulling it off of the vibrato. And I just pulled this from the vibrato. That's how you use the tool. So it's not a signal, but you just got 2 trades out of that. You got a trade and a potential trade, right? So you asked me about oil. Is just, yeah, oil. I know they stopped the trades on oil. I think it opened. Yep, that's how you, oh shoot, I changed it. But yes, let me cover that, because I definitely want to get in there, because this is what we are right now. We're gonna talk about how you apply all of these tools that we have. But I have to make sure you understand support and resistance to be able to do it. So let's talk, we can talk to take profits too. So yeah, that would have been, yeah. So if you're looking at this right here, that would have been the first entry. So if you're looking right here, somebody asked oil. I mean, the new contract open for oil, but you can already see, I know they stopped the trades on oil earlier, but oil is at the lowest it's ever been, ever. So it's at the, I mean, look where it's at. Here's where the new contract started. Here it is. This is that. That's why that shot up like that. So that's that new contract for oil. And it's actually, well, yeah, like 12 something a barrel right now. So at 12 something is what it's trading at, $12 and some change. So that's what we are right now on oil. So now back to my support and resistance line. So if I was trading this, okay, so no matter where I will pull this from, let's say I pulled it from here, you see how they got take profit 1, take profit 2, take profit 3, or if I came over here, which we're gonna, of course, I'm gonna show you how to use this. We're using that, and I'm gonna make sure you guys are proficient before we pull other tools into this. Is you kind of see these are just in alphabetical order on this one, but all of these are pivot lines, right? All of these are pivot lines. So, and then of course we come back over here. Now they're nothing more than support and resistance lines. So if I was trading this up, this would be my take profit. Let me see, what am I? So let's see, this is how you label a take profit 1. So there's actually another one in here, but I'm gonna just, for the purpose of training, I'm gonna just go with this one. Take profit 1, TP2, okay? This is how you get a TP2, okay? And this is how you end up with, like, so you always see a TP1, TP2, TP3. Understand these are not different. You cannot, in your MetaTrader 4, you can only enter 1 take profit, okay? You just have to make the decision how far up you want to ride this to. You are pretty much going to hit your first take profit because you are confluent on the 15-minute, you are confluent on the hour, and you're pretty much confluent on the 4-hour. You got confluence across the board. Or if you are in a swing of the market trade, which is a correction, right? You know, if you're in that, here you have this, okay? You're up, I'm up to here. You know, that's about 75 pips and you can call it, okay? So I traded to my support and resistance line. I'm gonna tell you always secure your profit, okay? I'm gonna just tell you that now. That's just how what I believe. So, but take profit 1 I got here. Now, if you got enough in your account or you want to trade up to take profit 3, understand that the confluence begins to run out, meaning that if I'm on the hour, notice how smooth this is on the hour. You know, look how smooth this is on the hour, right? Look at how this looks like it's just riding this up, right? Look at how smooth that is on the hour. If on a 4-hour, look how it look like the line is just like, the line just crossed right through the candles. So, I mean, look how smooth that, I mean, it's just real smooth on a 4-hour. So when I'm doing that, right, I got this. Now when I come back down, I got a little correction right here on the in between the 2nd and the 3rd. Okay, I got a little correction right here. So when I come here and I'm looking at this one, you see that that's what that correction is. So you notice it hit TP2, it pulled back, and then it went up for TP3. You have to understand that when it hits that, you have to ride the correction. you have to ride the correction. You have to ride the correction. You have to, you aha, you had an aha moment. Beautiful. I love it. So understand that you hit it. So anytime you hit a support and resistance line, it is going to test those lines. So it is going to hit those, you are going to test those, right? And it pulls up and it comes back. And then when you don't get those higher highs anymore, you don't get those, now my trend is over and it pulls back. You say you would have got scared and closed it? Well, that's the purpose of BYOB Market Talks. We don't want you to do that. We want you to be the signal and understand what's happening and what's going on. And we want you to be able to look at the charts and to be able to hear what the market is telling you. That's definitely what we want to be able to happen. It all depends. I would have to see it. I would have to see the trade you're talking about, because whenever I set a trade, I'm always a let it ride. I always let my trades ride, because you got to be to the point to where you're comfortable enough and your risk management is enough that I know that even if we're talking about 92%, if I put my stop loss in, it's going to do one or two things. It's hitting my stop loss, or it's hitting my take profit. It's going to hit the stop loss. So your risk management should be enough that it's going to go which way. Now, of course, we want to stay at that 92% or higher. We got to stay at that 92% or higher. We definitely want to be there. You want to be there. Oh my God, yes. Yes, 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 yes. The question is, always include a stop loss. Absolutely. You always include a stop loss. Oh my God, yes, absolutely. So let me show you something really quickly. So I'm gonna pull up one that I know just had a nice ride up. So let me go to the higher time frame on this one. This is so GBP, I'm gonna actually go to the 4 hour because I want to show you this. So GBP from here, GBP USD, so from down here, pretty much down here to up here, it was a nice ride up, okay? Had some pullback, it pulled up there, now it's coming down. So if you look at this, you can move your stop. Yeah, you can move it. Remember, the PSAR is like a trailing stop loss. I always hop up. If I'm a ride longer than 10 pips, I hop up. Like if I analyze from the hour, I hop up to the 4 hour for my stop loss. If I am on the 15, I hop up to the hour for my stop loss. I use that PSAR. So to give it room and that cushion for my pullbacks. But I mean, look at this. So imagine if you didn't put a stop loss down here. Imagine if you did not put a stop loss on this one, and you know, like this right here, it's either one of these, right? It's either this one, I want to say it's this one, because this was at all-time low. So I'm gonna just go with this one right here. So this is around the time frame where Boris Johnson went to the hospital. So let's just say you didn't put a stop loss in this one. So if you thought this was gonna sell and come back down here, and you were riding it and you did, now look at how this turned around. Look at how this turned around. You're talking about 344 pips, 344 pips. So, and that just depends on when you would have got in, because this came down and then it turned around. So let's just say you didn't have a stop loss in. I would rather hit my stop loss than be 344 pips in a hole. I would rather hit my stop loss than be 344 pips. You gotta, because you'll be, I've seen and I've heard stories. And so I'm telling you, I am a risk management advocate. Like, please, 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 please. Please, please, please use your stop loss, practice proper risk management. You are here to build wealth, and you do that one trade at a time. One trade at a time. One trade at a time. It's not gonna happen in one trade. So if you use proper risk management, then guess what? you know, right. I need you to do your time frame confluence. We got too many people and a lot of profit with their 777s, and you need to just go back in your demo account. Go back. Just go back and look at what you're analyzing.
Ladies and gentlemen, tonight, if you are getting tremendous value out of this understanding, I need you to drop a 555 in the chat if this is assisting you and helping you. This is why our whole concept of you being this signal. Many of you should have the opportunity to be tremendously excited, understanding BYOB Bank. Once again, if you're excited about this information and you can see the market, BYOB market talks, if this is exciting you, I need you to drop another 555 in the chat. Fantastic.
So, all right, so I'm so glad. Now, before we transition this call, or before, yes, it is definitely recorded. You want to go to BYOB Challenge on YouTube, BYOB Challenge on YouTube, and BYOB Challenge on YouTube, and just subscribe, and this will be uploaded. This will also be uploaded there. That's it. BYOB Challenge on YouTube. That's it. So before we try, oh, I do have a question. Do you like partials or I just let it ride. I just let it ride. And if I do any, I'll do a trailing stop loss. You know, but of course that's personal preference. It's no different. So now what I can tell you that I think that will help you, you know, you're saying you need support and resistance lines and full training. This is what I think can help you. This is what I think can help you guys practice. So come here, okay? Come here. And this is like the answer key in the back of the book, okay? So don't cheat, don't cheat, don't cheat, because that's all this is, okay? Don't cheat. Just kind of grab a currency pair that you know that's there. So like this would be GBP, JPY. So go to it. Go pull it up yourself. Oh, thank you. That's so sweet. Go pull it up yourself, right? You will come here and go GBP, JPY, right? Pull it up yourself. Now, try to drop your own support and resistance lines. Where do you see it? Look at where the market structure, right? Where they have it. Okay. Come back over here. And they are on there. This one is on the hour. So of course you want to do it on the hour where we're looking. So pull some off the hour and then drop support and resistance lines for your practice. And then once you do that, come back over here and then check your answers. You know how like you could check your answers in the back of the book kind of thing, so do that. So just grab a trade. We're not looking to take a trade. What you're doing is practicing support and resistance lines. Practice your support and resistance lines. So this is like the S in the back of the book, because that's all this is. This stop is a support and resistance. This entry is a support and resistance. This take profit is a support and resistance. This one and this one, that's all they are. So no matter which one you pick, it's going to be support and resistance. Now, I can tell you, as you get more fine-tuned in it, you'll start making some adjustments here and there. You know, you'll make little adjustments, you'll do little things here and there. But for the most part, just come here. You need some practice, you want to do it. How do I know if I did it right? How do I know if I'm on the right point? Guess what? Because where we're going, and we're using this tool, using pivots, I don't care what you're using your own personal markups, pulling something from the vibrata, right? Bringing it back over here. I'm straight price action. Whatever you're doing, you need support and resistance lines. So let's use the tools that we have available and here I have it. So 135.483, right? What was it, 483? So I think that's what it was. Yeah, 0.483. So, and you can kind of see where it is at the top of there. And so voila, that's, but you know, of course you would have dropped your own first, and then you can just come through here and start dropping support and resistance lines. And then of course, where you want to be on a line chart, and be using a line chart. Is this where I would have had mine? Oh, then you start perfecting and be like, no, I would actually bring mine down a little bit. I'm gonna bring mine down a tad bit because I know I want to use my closing price. I want to use this because it gives me more accurate. So, okay. All right, guys. So hopefully this kind of geared you up for let's make more than 10 pips. Years of studying in one night. Thank you. So, all right. So hopefully, guys, that actually was able to help you take that to the next
Go to
level.
daddy. Sleep.
So hold on. No, you said, do I just click the line? You click the little candle. There's a little drop down arrow on there. There's a little drop down arrow on there. So, but you click the little drop down arrow and that should help you right there. So, all right, ladies and gentlemen.